traders. Well, look, it's been another eventful week in markets. As usual, we've had plenty of headlines with respect to tariffs. So, lots and lots of tariff news. Obviously, the biggest news with respect to tariffs has been the high-level meetings between the US and China that were held in London this week. Where they moved towards a framework. To get trade concessions and potentially potentially build on a comprehensive trade deal. So all positives. Also there was talk that headlines that Canada and the US are also very close to signing a proper trade deal. And then we also heard from the US that if countries are negotiating in good faith, then that July the 9th deadline for tariffs could be extended further. So, look, the key takeaway is that most of the headlines that are coming out with regards to tariffs now, are positive headlines, and the market at the moment. Another thing that's worth noting is that there is some sort of tariff fatigue now coming into the market. In that the market is not reacting. With any sort of big moves anymore on the back of the tariff headlines that we saw in the past. And look, I'd say that the market probably will only react now in a meaningful way on tariffs if the tariffs actually start to impact onto economic data. And at the moment, that's not happening yet. We did have some very important economic data this week out of the US, where we had US CPI, monthly CPI data, and there was thoughts that the tariffs could start playing into CPI, and that we'd potentially see higher CPI now. And so that didn't translate this week, and we actually saw the number come out marginally lower than expectations, which was a positive. And overnight we saw in the US, we saw some producer price index data, and again, just like CPI, it came out marginally weaker than expected. So we're not seeing those tariffs actually coming and impacting economic data. Positive stuff, and on the back of that, we have seen US bond yields actually trading lower, which has been another big positive, because obviously higher bond yields have been a bit of a worry for the market. And so with those lower US bond yields, what we've seen as well is we've seen a decent sell-off in the US dollar. So if you have a look at the dollar index, it's trading now towards 3-year lows. Dollar index is well below 100, which is a big technical and psychological level. And so look, yes, in the currency space, the money has been made. Selling USD, and I'd imagine, further out, that if we see those bond yields continue to move lower, and especially if we start to see the market start getting more confident of Fed rate cuts, then that will feed into continued US dollar weakness. Okay, so moving along, the biggest news though so far this week that's impacting markets is some geopolitical risks that we've seen that's come out in the last 48 hours between what's happening in the Middle East with Israel and Iran again. So there are reports that Israel is ready to bomb Iran, take out its nuclear capabilities and facilities, something that it's obviously been wanting to do for a very long time. And the US is taking this obviously very seriously. They're looking at evacuating all non-essential personnel from some Middle Eastern countries, Iraq, from Baghdad, Bahrain, and also Kuwait. So yes, this is, and on the back of that, obviously the market reacted. The usual suspects, crude spiked higher, so crude's going back up, towards $70 again, trying to test that $70 level. And then also, obviously, gold, obviously spiked higher on the back of this as well. And that's back up testing, 3,400 level. Equities did sell off initially on the news, a little bit S&P maybe down about 30 points, but really hasn't gone on with it at all. So it's really, the reaction so far has been contained mainly just in the commodity space. But this weekend is definitely an event risk for the market, in that there is some last-ditch diplomatic basically meetings or diplomacy with the US and Iran, nuclear talks that are being held in Muscat. So on the back of those talks, obviously two things are going to happen. One is that Iran will agree, not to continue on with its nuclear ambitions, give that up, which obviously then would be very market friendly. But on the flip side, if they walk away, there's no agreements made, and that Iran doesn't agree to give up its nuclear capabilities, then obviously we're going to see a very wild open on Monday, because markets are going to start pricing in that potentially there's going to be a military strike by Israel on those failed talks. So crude could spike up very aggressively. Morgan Stanley's come out this morning, said if Iran and Israel do go to war, they target crude doubling from current levels and up towards $120, $130 a barrel. That would cause a lot of problems globally. And obviously gold would gap open, and those record highs at 3,500 plus no doubt would be trading. So and equities as well would gap lower. So if there's no agreement made on this meeting on the weekend, yes, on Monday, serious gap risk. So when you take your positions home on the weekend, know that you are trading this meeting in Muscat between the US and Iran for the Monday open. So need to be very careful with your positions on the close this weekend. Other than that, there is not a lot on the radar today, economic data-wise in Asia or in the US. So I'd imagine the market probably will just go into the weekend quiet, probably maybe trading a little bit nervous about what potentially may happen this weekend with the meeting. Next week is actually a big week for markets with a lot of central bank meetings, including the Fed. We'll talk about those on Monday. So good luck with trades at the end of the week, and we'll check back in shortly.